Good morning, everybody. How's everybody doing on a Friday? It's September 2nd. It's the start of a brand new month. Technically, that was yesterday, but had some commitments. So, anyways, it's been an odd week for me, honestly. Usually, I'm pretty routine driven, and this week was definitely big shakeup of that. Anyways, it's all good. Everything is fantastic. Real happy with how everything's going, and yeah, back in the saddle again. To round out the week, of course, next week is a long weekend. So I should say next weekend, this upcoming weekend is a long weekend. Monday, the markets will be closed. So be mindful of that. And of course, we're here a little bit early today just to take a peek at the NFP reaction. They've been calling it non-farm employment change recently, but this, of course, just used to be the NFP, non-farm payroll. And on the right-hand side of the screen, I've got this sort of split thing going on. This is just the ES futures, okay? So for anyone who's just tuning in maybe for the first time, or just to reiterate for anyone else in the stream, we've got the ES futures pulled up on the side. We'll get to the three questions as we always do in today's video, but I just wanted to sort of keep that on the sidebar so we can see as that 8:30 reaction comes out what's going on in our futures. All right, so that's the deal with that. Anyways, of course, the economic calendar is primarily all about the NFP. Right here, 8:30. Hourly earnings, unemployment rate, all that stuff comes out at the same time at 8:30. What do we have on the docket for next week? Of course, quiet early on with the Monday holiday. There are going to be some OPEC meetings, but after that, a couple of FOMC members speaking, unemployment claims, and Fed Chair Powell on Thursday. That's really where I see the volatility, unless there's some sort of impromptu announcement throughout the earlier part of the week. And then as we move further down the line, this is where things really spice up with our core CPI, core PPI. That's coming out Tuesday and Wednesday of not next week, but the week after that. Okay, so there's a little bit of a lull in terms of economic data that's coming out in the short term that's going to have a major impact on our market, all right? So that's the economic calendar. What do we have? Let's actually just drop this back one, so that way when, got to go back to, there we go. That way, when 8:30 does come around and the market does react, we can just refresh this and see what the numbers ultimately were. Let's see what we've got on a headlines front. This I found, you guys know this. I find that the way that these headlines are written is very, very interesting, right? Stock futures fall slightly ahead of key August jobs report. Okay, just keep that headline in the back of your mind. Would you say that these futures have fallen? Have these futures fallen? I mean, we're actually, well, here's the settlement from a futures perspective, right? We're actually above that. How can you, falling is down here. I'm blown away with how they write these headlines. Whereas, let's say that there was some possibly positive thing that was going to come out, right? They'd write the headline, stock futures holding firmly as blah, blah, blah is about to happen, right? So I don't know what the agenda is behind all of that, but it always gets me every single time how they write the headline. Anyways, what else do we have? It does look like there's some pretty large stock-specific headlines, specifically up at the top here. Meta and Qualcomm strike a deal to make custom virtual reality chips for the metaverse. So a little bit of a partnership there between Meta and Qualcomm. Interesting. We'll see how those are panning out from a charting perspective. Meta, of course, on the core list of companies. What else do we have here? Some political stuff. New CEO for Starbucks. Laxman Narasimhan. So I'm not sure if I butchered that one, but anyways, new CEO at Starbucks starting in April. That's cool. A little bit of restructure from a management perspective. I do, excuse me, I do own the stock in the long term, which is interesting. Decent chunk of that in the long-term portfolio. So we'll see how that pans out, but I'm definitely interested in seeing how the overall things change, not necessarily at the company. I'm not much of a fundamentalist. It's really just a chart perspective that I like, but we'll see. Anyways, I found that interesting. It was all over Twitter this morning as well. Tesla price target bumped up, but warned of vehicle price cuts ahead. Lululemon. Lululemon. No, it's Lululemon. Jumps after it boosts outlook and posts strong earnings beat. So that'll be a stock. So actually, very, very, very many stock-specific headlines this morning, as opposed to usually I feel like we check in and it's just like, oh, political this, political that. Okay, something about the climate, this, that, done. So this is interesting. We've got Meta and Qualcomm. We've got Starbucks, Tesla, Lululemon, Amazon's up next. Took all U.S. solar rooftops offline last year after a flurry of fires. Again, so it's still a stock-specific headline, although it's not a great and positive one. It's still stock-specific. Here's some political stuff. Downgrade to Nvidia. So again, another stock-specific headline. They're on fire this morning. Definitely worth checking in here just to get a sense for kind of what's going on out there. There's your climate headline. Remember that I just mentioned that it's usually just political this, political that, climate this, and then that's it. Well, there you go. Had to throw it in. What else do we have here? Lukoil. Whoa. So someone's suddenly passing away. Interesting. Another Amazon-specific headline. Loses effort to overturn historic union election at the Staten Island warehouse. So interesting. Nvidia, stock-specific again. The Russian energy influence, so political. Pinduoduo. I don't know. I'm not sure how these Chinese sort of Alibaba's Pinduoduos will pan out. We'll see. Again, about the CEO of Starbucks, downgrade to Dow Chemical, so stock specific again. Zero down payment mortgages to help minorities buy their first home from Bank of America. How to request an invite for the exclusive American Express Black Card. Start off by getting the Platinum. That's your first step. What else? Some of this stuff going on, right? So overall, stock-specific headlines, yes, this morning. Things I would be watching out for. Meta, Qualcomm, Starbucks, Tesla, and Lululemon with their beat, as well as possibly Nvidia. Many of these things are on the core list of companies, so we'll see them anyways. All right. So I'm obviously trying to kill a little bit of time as we're going here. We know that NFP is coming out at 8:30. That's approximately in 7-ish minutes. So what do we have in the earnings front? Obviously nothing today, but after the close yesterday, we got a little bit of Broadcom, AVGO, Lululemon, Lulu, and that's really it. These guys don't strike me as too important. So you know what we'll do? While we're waiting for that NFP and the big, I say big in quotes there, it may be a nothing burger. We don't know yet. But as we wait for the NFP number to come out, let's go ahead and take a quick look at some of those stock-specific headlines, like what's going on with Qualcomm, right? We're going to look at Meta anyways, but what's the deal with Qualcomm? How are they doing with this news? So QCOM, what's going on with Qualcomm? Big pin bar on yesterday's session. So as we know, this has been a pretty nasty downdraft in the marketplace, as we were sort of advocates for on the Wednesday afternoon update. Hey, probably not the best idea to chase this thing short here. And these bars really scattered all across the market. We'll get to them, don't worry. These would suggest a little bit of an oversold bounce could be on the horizon. Could be, right? So big pin bar in Qualcomm in the pre-market, not really getting any kind of love off of that Meta partnership here. So I don't know. I'm not overly convinced that it's just got to rally higher, but I would be paying attention to today inside of Qualcomm, at least, this gap. Right, so this right here, there it is. That technically represents the full gap, and we're opening just below it. So as long as we can continue to put in higher lows or some sort of consolidation earlier on in the session, that is possibly on the table as a long trade for today's session. Monitor for continuation to see if we get any sort of squeeze from shorts here who are late to the party. I think some of the squeeze has happened already. That was the rally from yesterday afternoon. But if it continues, again, gap fill and then monitor for some continuation here inside of Qualcomm. That's what I got for you in Qualcomm. What was the other? Starbucks, right? SBUX with the new CEO. Big rally yesterday, honestly, with some decent relative strength here compared to the overall market. The market itself was really closer to this, on a relative basis. We know that the SPY basically pulled into its prior breakout level, break and retest, right? We'll talk about that in just a moment. But, Starbucks on a relative basis is doing much better. It's supporting at the 50 SMA. It's really been going sideways as the broad market has been falling apart a little bit. Nice rally on yesterday's session as well. So what would I say about this one? Well, here's the prior day's high. We are technically opening on a very slight gap up in Starbucks. It's not really enough to make a gap fill trade attractive. So let's do something like this. You're not going to short this to capture, what is that? How many pennies? 15 pennies. You're not going to capture 15 cents on the downside for the gap fill. Instead, I would say watch and see if we can get a gap fill reversal back for higher to, again, obliterate the shorts who are stuck here. good news of the CEO swap, it seems. At least that's how the market's responding. We don't know how this guy is going to be just yet, but I'm assuming he's got a decent track record if he's made his way to the top of Starbucks. So anyways, just in terms of the overall structure, you're watching out for the shoulders of the head and shoulder pattern, right? We're definitely back above the neckline. You can see that here on the daily time frame, that is. So here's your head and shoulders. We're above the neckline. We recaptured that on yesterday's session. That's this level here. As long as we can hold up above the prior day's high, I think it's game on to get back towards the shoulder marks up around 88. All right, so that's what I would say about Starbucks. Does seem to be some positive force behind this overall movement based on the CEO changeup, some leadership changeup, supporting at the 50 SMA. We talked about the relative strength well above the 80 handle here. Just strikes me as a decent look for Starbucks. All right, and of course, who doesn't love coffee? Speaking of, taking a nice sip. All right, what else did we see for stock-specific headlines as we kill a little bit more time before that NFP number comes out? Ultimately, we've got about 3 minutes to go until NFP strikes. So Tesla got a price target upgrade from Piper Sandler. Tesla's in the core list of companies. Lululemon. Let's take a look at LULU. Okay, so big gap up in Lulu. Let's clear this drawing set. And then what I'm going to do, instead of just continuing to kill time with charts, we'll take a look through the chat, see who's here this morning, get the shout outs out early, and then that way we can just hit it when the NFP comes out in a couple minutes here. So Lulu, big gap up, obviously. I mean, just huge move after earnings, blasting up. Yesterday, pin bar, of course, hammer candle, whatever you want to call them. They're basically synonymous, right? So we want to know where the overnight high is. We want to know where the forecasted opening print is. And the prior high of day is way down here. So massive gap, right? Just like we were talked about in Starbucks with a relative strength perspective, Lulu, no relative strength here, right? Big move underneath the prior breakout level, right? Boom. And even on the break, there was no clean retest in Lulu. Instead, it went much lower, right? There's the breakout level, breakout, big, deep, not retest of the level, but break, and then rally back above. So this one's a little bit sloppier, just on a relative basis, clearly. But we know that there's good relative strength based on the earnings results. We are gapping right up into a known area of resistance. So would I be chasing this long here on the open? Absolutely not, is the answer to that question. I would not chase this long here. I think that instead the wise thing to do would be look for any sort of gap fill, inventory correction type activity, and not press your bet to the upside. Just because we're gapping into resistance. So overall, there's tighter risk reward on the downside. Stop goes above these highs if the setup presents itself for lower, and there's virtually zero structure in here. Even if you wanted to trade it to the bottom of this range, let's call that 312 just for round numbers sake. Clearly, the risk reward on an entry under the opening print, this, boom, right here, compared to roughly this, is quite easily at least a 2-to-1, if not 2.5, 3-to-1. And that's not even looking for the full gap fill, right, on earnings. So that's what I would say about Lulu. I would not chase it up here personally at the highs. I'm not really seeing a reason for this to just immediately smash through, make a move to here. Could that happen? Yeah, anything can happen in the marketplace, but I don't see the favorable risk reward for that setup. All right, so that's Lulu. That is a couple of things before we take a peek at our ES for the NFP. It's coming out in about 30 seconds here, 30 seconds to go until NFP, so I'm just going to do this with the chart. So if there is some crazy volatility, we can just adjust on the fly. But who's here this morning? What's going on in the chat? Small Good Decisions. Nice to see you. You are up first, kicking from the top. Plant-Based Will. Plant-Based Will, I'm sorry, your streak has ended. Small Good Decisions is starting a new one. If you can be here for 5 consecutive days in a row first, Small Good Decisions, that's either first in the chat or second after Philip, then you are eligible for a $50 PayPal or small. Oh, there is some NFP action. Look at that, moving up higher here in the ES. But you, my friend, Small Good Decisions, are eligible for, again, $50 PayPal, small t-shirt, large t-shirt, double XL t-shirt. You let me know which of those 4 options you'd like, and we can make it happen. So Small Good Decisions is in the challenge seat, in the hot seat, has to make it happen. 4 more consecutive days first or second after Philip, because overall, let's not forget why this challenge started, right? Let's rewind the script here a little bit. For anyone new to the stream, this challenge began because Philip has been consecutively the first one in the chat for what has felt like the entire time. The entire time. So we're seeing if someone can dethrone Philip ultimately in terms of consistency. And all we're asking for is 5 days. Philip has been first or had been first for what felt like months and months and months. So anyways, small good decisions. You, my friend, are in the challenge seat. After that, we've got M. Spears. We've got Philip. We've got Ida. We've got Rug Pull USA. We've got Kurt, Goku, Ross, Ryan Speed. Plant-Based Will is still here in the chat. Thanks for joining us. We've got David. We've got Mahogany Beats official channel. That's quite the name, but thank you for tuning in. We've got Diva Farmer, Elon Bust. I don't know what that one's all about. You hoping his company goes bust? We've got Live Better, Swipe, Mike's Boat, Andres Mendez. We've got Susan Virginia Beach, G Money, Antoine, Josh Brown, Downtown Josh Brown. We've got Fred. We've got A. Ramus. We've got Yuzi Bradley, Todd A., Lawrence, Jason Lee, James Young, JJ Cabrera. Scalp Daddy Dollars is in the building. Harry, Hamza, Tim, Street Beater, Ryan Lamb, Big Stick is here, Trading Vibes, Abel, Buckminster, Wallace, Peter. I mean, the whole gang's here. The whole gang is here. We've got Kid Ray, INF. I saw that photo in the Discord this morning, looking good in the TB shirt. Yep, Big Stick, Pinbar is indeed a hammer. Pete and Repeat, good morning. Core list, yep, we will go over that today. Let's see what else. What's up? What's good, my guy? We've got Alex Dickinson, Blackface. All right, everybody's here. Anyways, what's going on with NFP now that we've sort of given that a second to settle down? It looks like there was a pretty significant, or I don't know about significant in the grand scheme of this price action, but there's been a sizable push here in terms of what was going on in the overnight range, right? Big expansion of the overnight range to the upside, so that's definitely noteworthy. Let's go ahead and adjust our overnight high. And we're just going to quickly flip on over to, we don't want to support you, Jim. Thanks for the offer, though. We want to take a look at this. This is what we're interested in. So a quick refresh is going to tell us that our NFP, the big boy right here, had gone from a forecasted 295,000 to 315,000. So the non-farm employment change is bullish. More people are employed, right? The previous was 526,000. Interesting. I don't know what the direct cause is from that to that. Strikes me as a pretty decent change there. 200, let's just round, right? 200,000. But anyways, it was a beat from the expectation. So nonetheless, the market is responding favorably. It's not so much important that what these numbers are. It's how the market views the numbers, which is why ultimately we can rely on the technicals anyways. Just a couple other ones to talk about here. The hourly earnings month over month actually did not meet the expectation of the forecast, so down off by about 10 basis points. And the unemployment rate was actually up by 20 basis points. Interesting. So anyways, let's take a look now at our ES, see how things are settling. How is the dust going to fall? Let's see here. All right. Let's just get into the 3 questions because ultimately that's, we can't change the script just because we've got a little push higher here. Number 1, where are we opening in relationship to the prior day's range? Here's the high, here's the low. We're opening outside of the prior day's range now on a true gap up, right? So boom, we'll put a nice up arrow for question number 1. Question number 2, where are we opening in relationship to the overnight range? Here's the high, here's the low. Obviously, we know that in the NFP push, we just expanded the overnight range big time up towards these highs, and we're currently slated to be opening towards the overnight high, which is definitely a more bullish indication, right? So another up arrow for question number 2. That may or may not change within the next hour or so. We've got about an hour until the 9:30 bell, right? So we'll keep you posted on it. But for now, decent bullish takeaway. Question number 3, what is the overnight inventory position? Net long, net short, what's the deal there? To do that, you just extrapolate the settlement from the prior day session. That's the same thing as saying the closing print from the prior day session. And what we'll notice is that there's hardly any activity underneath. Most of the activity happened above, and this right here is certainly pushing us to skew towards the net long activity. So I would just say we're like 99% net long. So I'll put a nice little L here as well. 99% net long. What are the 3 questions here even tell us about the market? Why do we bother asking them every single day? Well, I'll tell you why. Question number 1, opening on a true gap up would indicate to us that, yes, we are opening outside of balance. People will be, waking up to their screens and saying, oh, goodness, what's going on here? The market's been falling apart the past couple of days. I was short down here. Now we're gapping up. I'm feeling some pain. What the heck? No good. I've got to do something. Right? So that's an implication. That's one takeaway from the gap up. The other takeaway is, okay, someone was astute and getting long down here and saying, oh, look, we're at the confluence of support trendline and breakout level in the S&Ps. Time to go long, right? Makes sense to go long. They're feeling good about this morning's position. They're thinking, okay, I'm either going to add to it because we have a firm reversal over the prior day's high, or I'm going to trim some profits if they're a short-term swing trader, right? And they're only looking to capture a small bit of dead cat bounce. No matter how you slice the cake, question number one is telling us that there should be some knee-jerk reactions here on the open, which means there is possibility for early morning trade as opposed to being patient and waiting for some structure to build out throughout the course of the day. Question number two is telling us that we're opening at the highs of the overnight session. What does that mean? Well, it means because we're opening with an imbalance of inventory, that's also directly related to question number three, and people will have a knee-jerk reaction this morning if we see a failure at the overnight high. Because we're opening so close to it, the risk reward is favorable for a gap fill trade to short this thing on the gap up and close the gap into the prior high of day. So this screen's getting a little bit sloppy. Let's talk about the framework for trading the gap here right now. We already know that based on the three questions, yes, there's possibility for early morning trade. What does this gap fill framework look like? If we open here, fail to take out the overnight high, and by fail, it really depends on your own individual time frame. Remember, we've had this discussion earlier on this week. If you're looking at a 5-minute failure, great. No acceptance, no price closes above the overnight high, trade lower through the opening print, short through the open, target prior high of day. That's the gap fill trade. If you're a longer time frame trader, you want to see confirmation on a 15-minute chart, great. You want to see a big upper wick happen here. Close looks something like this. Short underneath the low of that bar, looking for the gap to fill. If this doesn't happen in a kind manner, if the risk reward is not favorable on your time frame, that's fine. It's just not the trade for you today if that's what you're going to do, right? So don't beat yourself up about not getting the trade if you are missing out based on your own personal time frame analysis. Do not adjust what's comfortable for you just to take an extra trade, especially on a Friday, especially as we head into a long weekend. So I think that's a perfect segue right into Friday rules, long weekend rules, right? We talk about this sometimes on Fridays, but I feel like on a long weekend, it's more important than ever to just sort of reiterate, we're going into a 3-day weekend. The last thing you want to do as we sort of finish summer, it's the last kind of hurrah, right? People think about Labor Day here in the States. You don't want to, well, number one, you don't ever want to blow up your account. That's the most obvious thing ever. So number one, you don't want to blow up your account ever, but that's the last thing you want to do as you're headed into a long weekend that's supposed to be relaxing. All right, dial it back a little bit. I really sincerely hope no one's out there blowing up accounts on a regular basis, but what's the next step down, right? Okay, taking an outsized loss on a Friday session as we head into a long weekend. Terrible. You go hang out with some friends, you're having a barbecue outside, you're enjoying the nice weather before we dive into fall and potentially winter here. Last big get together with all the friends and family. Terrible. You don't want to be out at the barbecue kicking yourself, sulking because you just lost, I don't know whatever the number is for you. Could be let's go through the gamut, right? Could be $50, could be $500, could be $5,000, could be $50,000. I have no idea what size your account is, right? You go into the long weekend kicking yourself, it's not going to be a good time, all right? Dial it back one more time. You take a loss, but it's a reasonable loss. How do you feel? Probably decent. You protected yourself. The account's still intact. You followed your rules. All right, good, no problem. It's part of the game. We take losses every now and then, of course. No one's 100% perfect in the market. If you are, good luck sustaining that, and also probably stop lying to yourself. So anyways, the number one thing as we head into a Friday, especially with a long weekend, don't do anything silly out there. Stick to your rules. Absolutely do not blow up your account. That's the last thing anyone wants for anyone. And, if you don't see a trade that you're comfortable with, don't take it. Size down. Those things are okay to do on a Friday before a long weekend. Mental capital is very much a thing, right? We talk all the time about account capital, which is your dollars, but think about mental capital, the ability to show up every single day, do this stressful job, and make it out alive, right? The other side, and that's important. So, anyways, we took some time to talk about that. Please don't do anything silly before a long weekend. That's going to conclude the Friday long weekend rant, the risk management rant. It's way more important to be solvent and liquid as opposed to taking trades and blowing up accounts. Enough of that. We talked about the we talked about the gap fill framework. Failure at the overnight high, lower through the opening print on your particular time frame, could be the 5, 15, 30, whatever's comfortable for you. Short under the open, and we're targeting the prior high of day. You want to make sure that your risk reward is aligned. I personally like these on smaller time frames. I'm always watching the 5, right? So stop can go over high of day. If you never make it to the overnight high, then stop can go at and above the overnight high, right? Boom. And then you're looking for short under the open, close the gap, and we're playing off of the inventory correction trade, right? So that's scenario number 1 for me, at least. Scenario number 2 is that the gap doesn't fill at all, right? So think about this. The sellers should technically be able to move through this gap with relative ease. There's a whole lot of lack of structure here. The overall downdraft in the market has been the prevailing sort of wind, if you will, for the past couple of days. So should the gap not fill, what does that tell you about the sellers, right? When something doesn't happen, it tells you just as much about the market as when something does happen. So if we're under the expectation or impression that the gap should fill, there's relatively thin structure here. The prevailing winds from the past couple of days have undoubtedly been down, and there's no gap fill, then sellers are kind of evaporating. They're realizing, hey, it's not great to be short in the hole, literally at support. Anyone who is shorting this down here, I've got no sympathy for any short who is short at the low of day on yesterday's session. There's just no reason for it. If we take a quick peek at the SPY daily chart, again, there's zero reason for, again, no sympathy for anyone who is shorting at the low of day yesterday. At support here, at trendline support, extended to the downside. Sorry, no sympathy for you if you're short there. So again, just going back to the ES and the takeaways for this morning, I would say if we get a lack of filling of the gap, then shorts just don't want to hear it down here at the lows, which is probably a wise thing, right? It's probably not wise to be shorting right at support. But anyways, lack of gap fill does strike me as bullish, and we can look for some upside targets. That's what I've got for you in the ES. So it's all about the gap here this morning. These shorts, no sympathy. If they're still trapped, then, sayonara. Hopefully we get some sort of move higher to correct that. But do be mindful of this gap here, filling first and then reversing for a move higher. All right. So that's where my head's at this morning in the ES. Let's go up to a couple of higher time frames, hourly chart here, just to get a sense for what's going on in the overall structure. I do still want to be pretty clear here that yes, this is kind of the head and shoulders, right? There's the head and shoulders. This is the neckline, that gray, muted gray box and level that I've just drawn in here. So as long as we're underneath that, yeah, the bears are technically still in control, but in the very short term here, we're definitely starting to see a bit of a shift in tone with shorts trapped at the lows. And again, we just saw on the SPY daily, hideous location for a new money short. So anyways, even if we do rally a bit higher, it's all about this gray bar, which is roughly, let's give you some numbers here, 40.80 up to 40.85. That's the neckline of the head and shoulders. For all intents and purposes, you can see we've already put in a lower high underneath it, and we've moved lower. So if we do get there, then it gets interesting for the inverted case, right? You could certainly make the argument that maybe we see something that looks like this over time, and that just returns into a neckline, but back for the upside. We'll see. Obviously, that requires some time to unfold, but just a far-fetched idea. Think about it. Anyways, that's the ES on the higher time frame. Let's take our poll, and then after we take the poll, we will filter through the NQ, the Russell, and then we'll go through the core list, sectors, all that good stuff. All right, here we go. If you are bullish on today's session, if you think we're going to open here, partial gap fill or something, hang out here and then rally, squeeze out some more of these shorts, drop me a number 1 in the chat. Key component of a number 1 today is that you think we're going to remain, for the most part, above the prior high of day. If we get a little bit of gap fill activity that dribbles underneath, it's not the end of the world. You're still falling into a number 1 camp. If you're a bit more neutral on the day session, you think we're going to open here, dip a toe into the prior day's range, and maybe do something like this and go sideways. That, of course, is a number 2. Oops, there we go. And if you're a bear, if you think we're going to fill the gap into the prior value area, chop around in the value area, and just put in some sort of really weak-looking structure above the prior low of day, I'm not certain that I shouldn't say I'm not certain. I should say I am personally not favoring any high probability of a breakdown of the prior low of day. just based on the daily structure we just showed you on the SPY, right? I'm not of the belief that we go there and breach it on today's session. If it happens, then so be it. Again, the market can always do whatever it wants, but that's not a scenario where I would look to push my luck to the downside. But anyways, if you're of the belief for a number 3 that we come in and at least flirt with some acceptance in the value area from the prior day, drop me a number 3 in the chat. You are bearish. Of course, if you don't know what's going to happen, that's all right. Drop us a number 4, but you do want to try to shift from, saying this every day. I'm not saying you do say it every day, but if you are saying this more frequently than an actual, some sort of structured plan, you want to shift and try to get closer to having some, apologies, sip of coffee is warranted. You want to shift towards having some sort of idea or at least structural plan based on what the pre-market is telling you. Anyways, that's that. Let's go ahead and fire up the official chat poll here. I know you guys like that, so what do you think? 1, bull. 2, neutral. We'll add a couple options here. Got a number 3 for bearish. Number 4, I have absolutely no clue on a Friday long weekend. Oh, wow. Okay. Way over on the character count. I guess they don't want you to be funny with your wording in the polls. Okay. All right. Sorry. Just going to try to have some Friday jokes, lighten the mood a little bit, but looks like YouTube doesn't want to hear it. There's a character count for the poll responses. Anyways, that's out there in the world, or it should be shortly anyways. I would quickly say, if you haven't hit the thumbs up button already, what are you waiting for? You should probably go ahead and do that. It helps us out a bunch here on the stream side. It shows this stream to new people. And to be quite honest with you, I think one of the reasons why I do this is to sort of hopefully get people thinking about the right things before the bell. One of the reasons is I see a lot of new traders, and I was there, I've been there, I've done that, who on the open, they think, okay, I've just got to smash it long, smash it short. The market's bearish, market's bullish. There's a good headline, there's a bad headline. If you can just put a little bit of distance, a little bit of patience between yourself and the first decision that you make in the morning, or at least evaluate where you're at from a technical standpoint, prior high of day, prior low of day, then that's a win. That's a win. If you can make a slightly smarter decision, that's kind of the goal here. So a thumbs up goes a long way for hopefully getting some more people on board with that line of thinking. Anyways, let's see what we've got for some poll responses here this morning. I'm going to leave that up on the screen and just scroll up in the chat. What do we have? Going all the way up to the top. A lot of responses this morning. Wow. Good. All right. So good morning. A couple more people rolling in. We've got Raul. We've got Clay Z. Glitch the Glitched. That seems like a little bit of Inception to me. Stevie J is here. Live to trade another day. Absolutely. Johnny Whitaker. Good morning. David Lamb. And with that, we've got INF sending it with a number 1. Thinking that we're going to be bullish on today's session. After that, Mark, Swipe, Eric, they're all bullish as well. We've got Kid Ray with the number 1. Big Stick with the Uno. Of course, that means we're all in the number 1 camp this morning. It looks like a lot of people are bullish out here in the chat. Ones. Abel's our first 2, hanging out with Raz. Bruce DeBoss with the number 2 as well. Jay with the gold cash bag. Nice to see you. We've got a number 1 from Jay. Good morning to you, sir. We've got number 2 from Blackface. Scalp Daddy Dollars with the 2. We've got a couple of 1s. I haven't seen a single straight up 3 yet. I know there's always 1, so I'm searching for it. Searching. Sweet Onions, you are the winner of today's session for the first bear. Sweet Onions is dropping a straight up number 3 in the chat, thinking that we're going to go straight to hell in a handbasket. So yeah, we've got the full gamut. Got a couple 4s as well rolling in, but I would certainly say that the majority of the chat is falling into the, I would say skewing more towards the 1 as opposed to just a 1-2 even. Andres Mendez with the number 3 as well. Manuel with the number 3. A couple of 3s late to the party here. But they're here. They are here. James Young with the 3. I see you guys. All right, so there's some bears out there, but I would say that the majority of the chat is definitely falling into the bullish category. Yeah, Gregory Rulo drops #NoFOMO. There's no need to feel any fear of missing out. really any day, but I would particularly say on a Friday before a long weekend. Definitely, the market will be here. Don't you worry. I promise you that the market will open up on Tuesday morning next week. It'll be here. It'll be waiting. There'll be trade setups to trade on Tuesday. You don't have to nail it today. Okay. So if you don't see exactly what you need to see, no knee-jerk reactions. Don't do anything silly. Live to trade another day, right? So anyways, thank you all for participating in the poll. Again, it looks like based on the official count as well, there's a large majority of people who are voting number one bullish. And just to reiterate for anyone new tuning into the stream right now, we're looking at a gap up in the ES. We know that these shorts, terrible trade location. They already started to squeeze a little bit yesterday's session. If we get some more of that, that I believe is why the chat is feeling slightly more bullish than bearish, right? So that's the ES. Let's take a quick look at the NQ. NQ for the Nasdaq 100. We're going to start on the higher time frames on the NQ and work our way down towards the smaller ones. So we'll start with the 4-hour just to get an overall sense of the structure. We know that there's a slight discrepancy between this in the NQ and this in the ES. But nonetheless, this is still the neckline of our head and shoulders. That's the breakdown point, right? We're still quite far away. It's 12.9 roughly. Just use a nice round number there, 12.9, because we're still so far away. What would the structure here suggest as well? We're not out of a downtrend. Please don't forget that. We're bullish in the short term based on this small gap up at critical support. But remember, we've got highs, lows, lower lows, and that continues, right? Lower high, lower high, lower high. Could this be a lower high? It's possible. We've got lower low, lower low, lower low. So the bears are in control in the short-term trend of the NQs as well as the ES, right? We didn't really explicitly hash that out in the ES, but it's roughly the same, right? So NQs, downtrend, gap up, ES. 4-hour structure, I want to see where we're at from the break and retest level. Yesterday was a little bit nastier just in the sense that we actually moved underneath that area. And also, I don't know why someone didn't call me out in the chat, but once I draw this in, let me adjust a little bit. So this is not a helpful box for day trade scalping. Okay, this box is just a representation that here's the prior breakout level. There's the retest area. Obviously, we moved a little bit, more firmly through it than the ES. Okay, that's all that this box is trying to represent. But again, why didn't someone call me out in the chat for leaving a little bit of an ugly little? Oops, I don't know why it didn't click and grab. There we go. There we go. Boom. It's the small things. It's the small things, right? Small good decisions. I'm sure knows all about the small things, and that is one of the small things that makes me a little bit happier. Making sure the stream is full width or full height. Anyways, NQs. We talked about the 4-hour time frame structure. Let's take a quick look at the hourly, just see if there's anything glaring on the hourly chart that we should be aware of. Not really. I suppose this upper wick is running into some of the resistance from here, but overall it's still a gap happening in the pre-market, really tight in the overnight session and breaking out of that. So I would say, again, you're watching primarily for gap fill reversals. You have range compression, starting to get some expansion. Will this hold up is ultimately the question there. Also notice that the prior 2-day lows are, I don't want to say directly aligned with the overnight low, but pretty darn close, right? So this general zone, if it can hold up, would strike me as a step in the right direction for the buyers, squeezing out some of the shorts with bad trade location. So let's go down to the 15 now and see what we've got. We, of course, have to adjust our overnight high. So let's do that together. Let's go ahead and do something like that. There we go. This was the higher time frame box we're just going to get rid of that served its purpose, right? So in the NQs, same idea. If we open here, is the risk reward favorable enough to trade for the gap fill? Maybe, right? We've really got to see how high the opening drive goes and how much of an undercut from the overnight high it is, right? If we do something like this, of course that's worth it. Your stop goes here, your entry's under the open, and your target is here. Definitely at least like a 2-to-1, 2.5-to-1 risk reward ratio. So still looking for the gap fill trade in the NQ. And when and if we get here, looking for gap fill reversals, that would be my first thought, right? The structure is shifting. So that's what I would say. The critical level on the downside is 12,300 in your NQ. That's the prior high of day on the gap fill reversal. And if we remember this, again, I don't know how many of you guys are just tuning into the stream here, but remember this, as and if we don't fill the gap at all, if we just kind of hold up here, remember what that's telling us about the sellers, right? They're not really present. What doesn't happen in the market is just as important as what ultimately does happen in the market. So if the sellers can't fill this gap, then I would look for higher, right? And that's going to support the thesis of a number one response to our chat poll. All right, so that is the NQ on all time frames. Let's go with an if, right? If we fail back down into the prior range, I would just, to be honest with you, there might be some pullback trades off the overnight low based on that higher time frame structure we just saw. The prior 2-day lows were roughly aligned with this general area. So I'd be willing to watch out for support above the overnight low. But if we start getting below that, I'm not really too interested in trading around in here. Might just call it early on a Friday, to be quite frank with you. I wasn't at the desk yesterday. You guys know that there was no stream. I don't really feel the need to, like I said earlier on in today's stream, it's been an odd week for me personally, just not sticking to my normal routine. It's decent to to change it up every now and then, but I'm definitely a creature of habit. I'm sure you guys can tell. Anyways, that's the NQ. Those are the levels I'm watching. As long as we're kind of holding up here for maybe some sort of reversal long, I'm willing to entertain possibilities for long-sided trades. Don't really want to get overly aggressive as in if we move into the value area or just chop around, close to here. So we'll see. That's my interpretation of the NQ. Let's quickly take a peek at the RTY, the Russell, what's going on with this guy, and we'll go up to those higher time frames as well just to get a general sense of what's going on here. Oops, we don't want the 2, we want the 4 hour. There we are. So this box is nice and bright, and you can clearly see, again, that is your neckline of the head and shoulders. It's much further away in the Russell as compared to the SPY and some other places. I will say, though, that this is actually quite close or more bullish as compared to the NQ. It's retest level of the prior breakout, right? So resistance, 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 break, retest, go. We know that, right? This obviously held up to the T at the lows there. So more similar to the SPY, which strikes me as a bit more bullish than the NQ. Overall 4-hour structure, obviously lower highs continuously being put in and lower lows as well to complement that, confirming a downtrend. Obviously on the hourly now, just taking a more granular approach. Where are we kind of in relationship to the past couple of days? The prior 2-day lows aren't stacked up at the overnight low like we just saw in the NQ. So not quite as interested in those pullbacks as we were in the NQ. As a matter of fact, it looks like it's offering some resistance here in the pre-market. We do have to adjust our overnight high, so let's do that together. Here we go. Boom. All set. The value area for anyone concerned is probably in here. Just like in the NQ, I would say watching for the gap fill and then reversal off of it. If we pull into the overnight low and reverse off of it, still going to entertain that as a bullish force for the marketplace. But overall, you probably want to see the Russell just as a relative strength, relative weakness indicator hold up outside the prior high of day. That's a risk on indication. If we fall back in aggressively and chop around in here, neutral to slightly risk off, probably building out a bear flag on the SPY daily time frame, right? So that is the futures. Those are the futures. Back on over to the ESU22. That is our sort of baby, right? Taking a look at the 15er again, not much has changed. Still opening on the gap up. Again, for anyone just tuning into the stream, looking for this first. Failure at the overnight high, short through the opening print, looking for the gap fill reversal when and if we make it to the prior high of day. If we don't get here in the first place, it's telling us that the sellers are weak. You should favor longs. And if we go further than the overnight low, in particular, overnight low is critical, then I don't really want to get involved in here, right? So that's the ES. Let's take a look through some sectors now. What's going on from a sector perspective? Again, quick reminder, I know I'm hogging it today, but if you don't hit the thumbs up button, it's kind of a detriment to the stream. So what are you waiting for? Do it. Costs nothing. Costs nothing. All right, XLF, what's going on in financials? Critical support did hold here at the 3250. This is the level that we discussed on the Wednesday video, right? So you had all of your resistance, break, retest, and go. It's pretty much the same structure in many of the S&P components, right? So hammer candle printed on the daily time frame strikes me as bullish here. Buyers stepped up at the lows. We are gapping up and over the high of that hammer candle. So shorts with terrible trade location are squeezing out or just bailing. You guys tell me, is it inappropriate to call every single time a seller covers a short squeeze? Should we reserve that term for more aggressive instances of that? Should we just say sellers are covering? I don't know. I feel like it might be a little bit inappropriate to call every single move like this a short squeeze. I don't know if that's neither here nor there, but anyways, moving on. As long as we can hold up above the prior high of day, it does trigger a daily reversal off of support, holding the 50 SMA, which is the blue line, by the way. And the target here on a small dead cat bounce would be the back test of 33.75. That, of course, has to be bullish pressure for the S&P 500 as we move into the last trading day of the week. All right, so that's your XLF. Strikes me to be in a bullish position currently. Energy, what's going on here? Playing nicely. Thank you very much. Look at what's going on. Breaching, or at least attempting to breach, that 78.41. Remember that this was ultimately what we were trying to avoid for a better bottom in the SPY, right? We had this sort of pattern here, ascending triangle, break, retest. Looked like it wanted to hold on the Wednesday session with that big reversal off of it, the gap down, right? And now we've got a hammer candle. Yes, it is still a hammer. Don't get me wrong. That is a bullish structure, and we are gapping up. Don't get me wrong. It is bullish. But there was at least an attempt to move underneath 78.41. So going forward, we want to see if this gap can fade, and then we can close week kind of around 79, sets up the move for early next week on a breakdown there, which would be a bullish force for the S&P 500. So watching this continue to develop and resolve that 78.41 area. Really interested in how energy handles that. For now, though, on today's session, this isn't great. Watch for a gap fill. That would be the best outcome for the energy sector, a gap fill and a close inside the prior day's range. Next up, Xlp Consumer Staples, a little bit deeper of a pullback with the gap down yesterday, but clearly fighting back strongly, right? So now gap up here over the prior day's high, still beneath, I think, right? Yeah, just beneath the 50 SMA, but we are holding on to, or at least trying to hold on to, this prior shelf of resistance as newfound support. It's, again, guys, please don't misunderstand what I'm saying. From here to here to here, yes, downtrend, lower low, lower low, lower low, yes, downtrend. But in the short term, for today's session at least, there is the possibility of a little bit of upward lift if these gap fill reversals take place, all right? It doesn't change the overall structure. We're still probably going to put in a lower high on the daily time frame, but it's at least an opportunity to say, okay, lower high, but can we put in a higher low and start a new leg higher? That's kind of what it's all about identifying at this point in time. All right, so that's what I would say about the XLP for today's session. Gap up, watch for the inventory correction, then some sort of reversal off of it. All right, XLY, consumer discretionary. What's going on in the discretionary space? Gap down yesterday, just like the XLP, under the 50 SMA, gapping up this morning, back above the 50 SMA, back above this level as well here. So nice recapture of 156.82. It does strike me as a little bit of a bullish pressure for the S&P 500. Just like everything else, be mindful of the inventory correction to fill the gap, close that to the prior 156.82. It's also the intraday resistance from the Wednesday session, right? So rejection 1, rejection 2 into the close. If we can hold up above that, again, all of these shorts from here are absolutely screwed, and we're looking for a bit of a pressure to the upside. So we'll see if that can take place. That's the XLY. 156.82 is your number. If we fail underneath it, I would chalk it up to choppy and just kind of sideways, not really want to get too involved in this overall area unless there's a clear and obvious, rejection or downtrend that's taking place on the day's session. But overall, based on where we've come from, how we've arrived at where we're at, right, the 50 SMA, I would just be very cautious and skeptical of just pure out downward force through there. Anyways, XLB materials, what's going on here? Pin bar on the prior day session, hammer on the gap down, break and retest level is in play for support here. So gapping up over that candle high, as long as we hold it and do something like this for the gap fill reversal, daily buy setup is triggered, and we are looking for higher to close the overhead gap, which is up around 75.40. So 75.40 would be your upside target on today's session. And also, we've got this obviously for the gap close. We're in between literally a area with zero structure, zero, zilch, nada in that general area. So first thought is gap fill and then gap fill like this. Or if it's the opposite, gap fill and gap fill, that's also a possible setup. So just be really aware of your 74.60 and your 75.40 here in the XLB. Overall, remember guys, really lightweight sector. It's not going to make or break the day. Next up is the XLI. What's going on in industrial? 7% notoriously of the S&P 500. You can see that we're gapping up firmly, so be mindful of your inventory correction as always, and buckle your seatbelts to see if we can find a little bit of a gap fill reversal. That's off the prior high of day. 93 is your number here. 7%, decent weight, but moving on. Next up, we've got the XLC. Remember what we discussed in the Wednesday video, right? We've basically got a 100% retracement. We didn't make it all the way into that 53.42, and we're starting to catch a little bit of reversal off of it. So because we're at critical support, and we'll also see something similar in the XLV, Because we're at critical support, it's kind of like, all right, shorts are running out of bullets here. If we can get up and over this 55.32, which is this daily level right here, then maybe it's game on for a move back to the top of the range, right? And we play ping pong in this overall box. Boom, 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 right? Until ultimately one way or another it is breached in a more firm fashion. But as of right now, right, I would watch your 55.32. If we come into it and reject hard off, coming back into the lows, I would say it's not so much about just rotating to the bottom of the range. It's more about, is this going to be something that does this and then break down from this range? So 55.32 kind of critical on today's session with the slight gap ups we're seeing across the market. If the market's bullish, we want to see a close at or above 55.32. If it's bearish and weak here, and we are ultimately looking for the rollover pattern for underneath the bottom of the daily range, you want to see a big rejection at 55.32. So that is your critical pivot, I was going to say, on today's session. Real estate, lightweight sector, doesn't mean a whole lot for the S&Ps. Here's your breakout, right? Holding up there for support, getting a gap up this morning. I would just be watching for a lower high to be produced on the daily time frame of the real estate sector. Of course, we have our head and shoulders pattern neckline at 43.11. Anything underneath it obviously continues this as a downtrend reversal here in your XLP. Next up, what do we see in the, XLRE, real estate? What am I saying? XLV, as I was mentioning, right? Really, really critical number, 125. That's the bottom end of the monthly range. Here it is, just to give you a high-level view. Obviously, the support there yesterday was really influential on the market finding a reversal, so that was important. That was a good structural development here in the XLV, not just smashing through that. So I like what I'm seeing. We're respecting the level. We're not out of the woods, though. Let me still, again, be abundantly clear about some of these things. We are not out of the woods in the XLV. Obviously, we have these multi-day highs stacking. If we can breach 127.16, which is also support from in here, to step in the right direction. We're kind of flirting with that this morning, and we're breaking out of this range. So again, is there the possibility for a lower high somewhere underneath 130.50? Absolutely. I'm not saying that there isn't, but for now, at least on the Friday session, if we can get above 127.16, I think we're okay for a temporary short-term bottom in the S&P 500, right? Just a pause in the selling if the XLV gets over that number, over that hump, right? Good volume coming in on the prior day's session, I would point out, right? So here, it's not like this was meek with volume down below. It was right on, right on par with what's kind of average in your XLV. So I like that. All good here inside the healthcare sector. Remember that this is the second heaviest weighted component of the S&P 500, so really important that this plays nicely and supports a move higher in the SPY. XLK, the tech sector, what's going on with tech? What's going on with tech, the heaviest weighted component? Hammer candle off of the break and retest level from right here, of course. We know that's the similar structure out there across the market. Gap up this morning. As long as we can hold the gap fill reversal, triggers a daily buy setup, right? Technically, 100% retracement. Hammer candle off of a known area of support. It would seem reasonable for a little bit of a dead cat bounce to happen here, right? We're at support. We're printing the right structure. It makes sense, right? So that's what I'm watching for in the XLK, watching for a little bit of inventory correction. And if we hold the gap, bullish into the remainder of today's session. So what's the number? Let's give you the prior high of day, roughly 134.75, as long as we can close and hold above that. Something that, boom, does this. Game on for a little bit of a dead cat. The next target, of course, is here, 139.20 and the 50 SMA. Again, let me be abundantly clear that this does not change the fact that we are in a daily downtrend. Of course, a rally to this would produce another lower high, and we've got lower lows, right? Lower low, lower low. So that is on the table. Downtrend is still intact, but on today's session, in the short term, as long as we're above that 134.75, we're golden for a little bit of a dead cat bounce, is my belief, all right? So that's your XLK. Really important to keep an eye on that one. Heaviest weighted component of the S&P 500. What do we have in the XLU? In the Utes sector, rally back to the highs. So not really a great look in utilities. We were talking about the fact that on Tuesday, right? Or was it Wednesday? I can't really remember. Maybe it was Wednesday. The fact that we kind of closed firmly underneath, right, this prior pivot high in here, it was a decent look, but now we're right back at it and gapping up in the pre-market. So not great in terms of the risk off sector here cooling off. We really wanted to see this come a little bit lower, at least for the sort of 100% retracement of this overall move closer to the 72 handle. So not ideal, but better at least that we're not hanging up at 78. I'll give it that. A little bit of credit where credit is due, but not perfect by any stretch of the imagination, right? All right, that's what we've got in the S&P sectors. Let's take a look at the SPY itself. Viewership is awful on a Friday. It looks like we can hardly keep the numbers at 550. Anyways, that's a problem for me to solve, not you. Let's take a sip of coffee and then get into the SPY. So we can see here, again, I have no remorse for anyone who went short at the low of the prior day's session, sitting on what to me is quite obviously a big confluence of supports: prior breakout level, boom, 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 retest level, boom, boom, and support trend line, right? We gave you the support trend line on the Wednesday video. We talked about the confluence of supports there. We talked about the fact that, it wouldn't be wise to go short underneath the low edge of the expected move as we're coming into these things. So again, that's just why I've been really firm on the no remorse for the sellers there. If you were one of them, hopefully it's a learning lesson. If you're someone who went long there, then congratulations to you. Kudos to you. You probably did everything correct. So anyways, SPY on today's session, as we know, just like the ES, is gapping up out of the prior day's range. You can see that we're firmly opening towards the overnight highs, which does set up favorable risk reward for the gap fill to the downside. So I know, as we've been going through the sectors, I've been mentioning everything bullish, right? And that is true, but the first indication of an imbalanced inventory in the overnight like this is for some of it to correct and a little bit of gap fill to take place. So I'm still looking for that in the SPY, okay? That has not changed here in the SPY. Looks like we've got a sticker in the chat. I'm going to shut down the poll. Looks like that's kind of completed. And I want to see what's going on with this yellow thing. What's going on with this yellow thing? Street Beater 86 with the 10. Thank you. Thank you so much. Appreciate the donation to the stream. That's going to go right in the coffee fund. I mentioned the other day, guys, that I got the Cuban coffee did come in, but I'm still finishing up the Folgers. My very basic pedestrian palate is enjoying the remainder of my Folgers, but I'll let you guys know as soon as the Cuban starts flowing, and I'm sure you'll hear it in my voice, right? You'll hear it in my voice because I'm very sensitive to any coffee that is like rocket fuel, and from what I hear, Cuban coffee is indeed like rocket fuel. All right, so SPY, we talked about the gap fill, right? That's the downside here. If we reject the overnight high, trade short through the opening print, you have a gap to fill down to the prior high of day. Roughly 397 is the number, okay? So that's what I would watch for here. We know that this reaction has been caused by the jobs number, the NFP, and if it fades a little bit, that would seem reasonable to me as an expectation to the downside. What's interesting here is that we're coming into our level that we discussed on the Wednesday video that was, the squeeze for yesterday. Obviously, we opened on the gap down, so that wasn't really in play. But this 399.50, for those of you who might have not watched the Wednesday video, let's quickly fire up a 5-day chart here on the right. You can see, right, if I just zoom in a little bit on that, this is where a majority of the acceptance happened on the, Tuesday and Wednesday sessions here and here. So, the more we can get over this kind of level, 399.50, 400, it's just, trapping all of the shorts who are late to the party here. Not even the ones who entered at the worst possible time, but just the people who are here as well. They start to feel some pain as we start traveling above 399.50. So overall, definitely looking for this to act as a critical pivot. Again, I do want to reinforce the idea that, yes, the first thought is, can we get some of this gap to fill? We are gapping up on today's session. So use the framework. Let's walk through the framework one more time. Here it is. We're opening here, roughly. If we fail to take out the overnight high, so something that does this and comes back down underneath, could be on the 5-minute chart, could be on the 15-minute chart. Do whatever time frame works best for your trading psychology, but make sure the risk reward's intact, right? Our target is a gap close to the prior high of day. So underneath the opening print, here, that little cross initiates a short, and you're looking to close the gap with a stop over the high of day. Make sure your risk reward is intact. 2 to 1, 2.5 to 1, whatever. That is decent, right? If you're trading on a 15-minute time frame chart and the candles happen to form like this, so let's go, here's your overnight high, here's the rough opening price, here's the gap close. So if your 15-minute bar closes like this, and all of a sudden you've got to go short underneath the 15-minute bar low to target the gap close with a stop over high of day, I mean, that trade doesn't make much sense, right? So make sure that the risk reward makes sense, but the first indication is for a gap close on this morning session, all right? So watching that for the downside in the SPY. Remember what we also said while we were looking at the ES. The reason I'm rehashing the same thing is because I see that the chat numbers are actually picking up here. is if we get zero gap fill whatsoever and we just hang out here, we do not close the gap. What does that tell you about the sellers, right? The sellers are inherently weak. This is an area of virtually zero structure. They should be able to push it lower, especially with the prevailing winds in the market being down. So if that doesn't happen, again, it's telling you that sellers are absolutely weak, and above 399.50, many more of them probably fold, and we do experience that slight squeeze to the upside. All right, so that's my thinking in the SPY this morning. If we firmly move inside the prior day's range, and by firmly, I just mean underneath the overnight low, I'm not looking to get overly directional or active in this area. If a 5-minute scalp presents itself, a 15-minute scalp presents itself, fantastic. But nothing in the grand scheme in terms of big pivot levels that we can discuss here on this stream. All right, so that's the SPY. Same thing's going to hold up for the Qs. We did this in the NQs, the futures, just a moment ago, but the thinking is the exact same. Right, here's the daily time frame chart that we can just quickly discuss. We're gapping up into this area right here, so a little bit smaller of a gap, but there you go, gap fill, and then reversal off of it strikes me as a decent scenario to be watching out for. Again, it requires a failure at the overnight high, short through the open, target the gap close. 300 is your QQQ number. Actually, what I'm just realizing now, am I crazy? Yeah, yes. Okay, never mind. I thought I was going to have an epiphany, but I'm not. If I quickly go over to the NQ, I was going to say, is the NQ just, shave off the 12,000 and you're left with the QQQ number, but obviously that's not the case, right? You've got 12,300 as your gap close, which is why I was like, 300, round number, makes sense, right? But, obviously your overnight high in the QQQ is not 403. So I got excited for a moment. Maybe you heard it in my voice, but it's certainly not the case. So anyways, scatterbrain, not taking place this morning. So boom. Anyways, failure, lower, gap fill, 300, boom, there it is. If it doesn't fill at all, again, it's telling us that the sellers are weak, look for higher, and if we accept in the prior day's range, wouldn't really want to get overly aggressive in this general area here, noting that we're at pretty critical support, the break and retest level from the daily time frame, not ideal for new money shorts. All right, that's the Qs. We know that the IWM is just kind of, more of a risk-off, risk-on indication, and right now, being on the gap up, it's a better look. It's not completely bearish here, but I would just be mindful that if this stays above the prior high of day, it's bullish. If it drops back into the prior day's range, I would not be pushing my luck across the broad market. All right, that is the broad market. Let's take a quick peek through our core list companies. I know everybody's asking about them. Apple, hammer candle off of the 50 SMA, off of the support trend line, off of this rough area of support from the gap close here, does strike me as bullish. Gap up this morning. So everything that we've discussed in the Qs and the SPY is the same. Apply your gap rules framework. I would say a failure at 160.25 to move lower through the opening print is bearish to close the gap to 158.50. When and if we get there, you're looking for support for a gap fill reversal. That is the bull trade here in Apple. I'm not saying, so let me also say this. I'm not saying that you guys have to take the gap fill trade. Just recognize that that's the dynamic that could potentially take place here early on in the session because of the imbalanced overnight inventory. Okay, so just because this is kind of what we're looking at, you don't have to use that framework. You don't have to short this market if you're not comfortable with doing that, but just be aware that that's the dynamic at play. So maybe you want to be patient and wait for the gap fill reversal if that unfolds, right? If you're comfortable going long, that's probably what you want to see. If you're comfortable with going long, you probably want to see an opening range and a break here with zero gap fill to confirm that the sellers are weak. All right. So there's a trade for everybody. I'm just telling you kind of the frameworks that are out there to be applied to this marketplace, and Apple is definitely falling into that category. Next up, Netflix. What's going on here? We were talking about this one just being boring, and it still is kind of boring in this range. It's not firmly above our 234 yet. Oops, we want this. 234 is kind of the gatekeeper for more significant upside. We've got a trading range here. We're just playing ping pong, back, forth, back, forth, back, forth. We are opening on a gap up, so be mindful of the inventory correction, higher lows. And, we can get back into that 234, but I'm probably not looking for something that does this on a Friday session before a long weekend. Could it happen? Yeah, anything can always happen in the marketplace. But to me, that wouldn't seem like a high probability scenario. If it does happen and you're interested in trading Netflix, that's fine. Again, your gatekeeper is 234. I'm just not certain I would be pushing my luck on a Friday like that. Anyways, Tesla's up next. We know that there was a headline out there on this one about vehicle production cuts, but there was an upgrade to the price target, which was interesting. Kind of the dichotomy between something being worse but being better for the company. Anyways, what do we see in Tesla? Gap up here this morning, just like everything else. So that's great. We've got this kind of thing going on here. So gap fill, then move back higher. Looks good. Daily time frame, hammer candles off of 50 SMA. Okay, so this is interesting. This strikes me as important. We remember here that on the Wednesday video, we discussed that although this looks like pretty thick structure on the daily time frame, there's not a whole lot going on there on the hourly. So the fact that this did not aggressively, break all the way down through that area does strike me as a decent takeaway for the buyers. Hammer candle, again, as long as we're above the high of that hammer, we're triggering a daily reversal setup back to the upside. I would just be mindful that this might be something to pay attention to, right? We've got a range. We've got a look below and fail. Technically, we're opening right just slightly above that 280.15. So it's a decent look here. But if we kind of just fizzle out and go sideways to lower, if we fail 280.15, then that's not a great look for Tesla, right? Instead, what that turns into is kind of a break, retest, and something like this. So really be mindful of how Tesla closes in regard to 280.15 on today's session. That's a critical pivot. Acceptance above, bullish, acceptance below, probably much more bearish than you think based on the break, retest, and go possibility. So 280.15, critical inside of Tesla. Next up, we've got QQQ. What's going on with the QQQ? Really sideways range down here at the lows. It's definitely building out a bear flag. We're gapping up over not over the top of that red bar, but over the top of the green bar from yesterday at least. We're not out of the woods yet here. So let's see. Let's go to, let's do it here. We're doing it here, and we want to turn off these extended hours. I just want to make sure that this is still the most accurate level that we're looking at, that 110.20. If I zoom in here on the hourly, yeah, that's pretty good. Pretty darn good. Maybe it's slightly higher. Maybe it's slightly higher. Just a hair. Just a hair. Can we go to 50 maybe? If you guys haven't been able to tell, I really like my nice round numbers. It might be an OCD thing. It might be a this, that, or the other thing, but I like the round numbers. It's just easier to say as I'm speaking in the videos as well. But that'll certainly do. 110.50. 110.50. So a slight adjustment, about 30 cents higher here inside of Google to the level. As long as we're inside of this range, it does strike me as bear flag consolidation. If we can get above it, I think shorts will feel some pain who are trapped in here. So that's what I would say about our QQQ chart. There we go back to, we want to go back to Google. There's the pre-market version. So we're right at that number for all intents and purposes, okay? So just be watchful of your 110.50. Below it, content for the bear flag consolidation on the daily. More acceptance above, starts to squeeze, and obviously that's a bullish pressure for the broad market overall, right? So really be mindful of your Google. Really heavy-weighted component, obviously, of the S&Ps. Meta had a stock-specific headline, right? Yesterday, just a complete digestion of the gap up that faded on Wednesday, and now we're gapping up slightly again, up and over that 167 quarter. So to me, this has consolidated. This has gone sideways enough where there's not really a concern about, oversold, overbought, whatever. So I would say as long as we can hold up above 167.25, consolidation above on the open strikes me as bullish. Look for breakouts here to get us into 172.56. That could easily happen on a Friday session. That's not asking too much of Meta in my estimation. So bullish here inside of Meta on the 167.25 hold. If we fail back down into the 2-day balance, of course, it's just technically more balance, right? Don't get chopped up in this range. To really trade Meta, you want to see clean price action above 167.25. I would not really want to get chopped up in here, okay? So that's my thought on Meta. Nvidia, we know that this one kind of got spanked the other day. Big nasty move underneath the support here. Big miss on my part. I was kind of thinking, okay, into the end of the week, we'll probably be contained at the swing low. Big gaff. Big old gaff on my part. This is not nearly as bullish as any of the other charts that we've seen thus far. You can see that we are not opening on a true gap. We're opening inside the prior day's range, underneath this support. Not great. Not great. All right. So because of that, Nvidia is probably not really on my radar, to be quite frank with you. The only thing I could see in Nvidia is a break into this gap overhead from the prior day's session, right? If we can start to move into this gap, that might be interesting for a long setup, but opening where it's at currently, not so interested. So the critical pivot here in Nvidia is 144.50. We'll leave it at that. Certainly don't want to be chasing this to the downside here after this complete destruction on the 100% retracement. Next up, Microsoft. What's going on in Softy? Taking a quick peek here. Hammer candle did hold up at the prior support, right? 253.50. Not even quite making it all the way there. Gap up this morning strikes me as a bullish look. Just like everything else inventory correction and a hold above 261 is your bullish trade to rotate up towards the top of the 3-day balance range here. That is a look below and fail, and we're targeting 266.65. That's your upside inside of Microsoft. Failing underneath 261, again, probably just don't want to get overly chopped around inside the prior day's range, unless there's a very, very obvious setup, probably staying away. Last but not least, we've got the mini beast, Amazon. With 5 minutes to spare, we are going to get out of here early because we're opening on a gap. Want to have the screen set up and full focus for the opening trade. So we're going to probably wrap it up at 9:27, 9:28. We'll hang out with you for a couple minutes. If you're going to head out early, just do me a favor and hit the thumbs up button on your way out. It doesn't cost you anything, and it helps the stream out a ton. So I appreciate it. Anyways, Amazon gapping up, right? So just like everything else, mindful of the inventory correction. Probably don't chase it long here on the open until we get a structure and then break out with zero gap fill. That tells us that the sellers are weak. So it is bullish, but you need some sort of structure to place a stop loss first. If you just slam it long on the open, what are you going to do if it closes or starts moving into the gap? Are you going to panic out here? Are you going to panic out here? You're going to put your stop under here? Well, if you're doing that, you've got to ask for a quite the sizable target on the upside to make that risk reward worth it, right? So that's really why you don't ever want to chase things long on the gap up unless you have a well-defined stop loss predetermined. Anyways, Amazon inventory correction gap fill reversal. Your number is 128 inside of Amazon, all right? That's your upside there. And the targets, if we sort of do get some sort of push higher, I would say on the gap fill reversal for something that does this, obviously overnight high is the first target, then prior high of day at 130.60 is next up on your radar. So that's the upside inside of Amazon. All right, thanks for sticking with me through it. We've got to adjust our overnight high in the ES. Again, this is why we want to get out of here slightly early. So the gap trade is on the table. Thank you all for tuning in. It looks like we've got Slick Messy dropping a 5 in the chat as well. Thank you so much, Slick. I believe, let me do this real quick. Let me do this. Siege. I don't know if Siege is in the chat. If Siege is in the chat, who's also in the Discord, I just want to say thank you to Siege, who has been consistently in my absence posting the market internals in the Discord. So truly appreciate that. We've got some other people here in the chat. We've got Coach Cleats, Big Stick. We got Yuan, Eric Booyah. Long time no see. Or maybe I just haven't been reading the name, but nice to see you. We've got Jonathan, Gregory Rulo. We've covered. Siege is here. Hey, look at that. Appreciate you. Steve is here. We've got Pearl. Mike's boat is in the building. All right, that's going to wrap it up, guys. Thank you all for tuning in. Again, don't do anything silly into a long summer sort of blowout weekend. Don't forget the market will be closed on Monday. And if you're not in the Discord, get in there. It's where we hang out. I'll see you soon. Wish everybody a great trading day and an even better weekend. Have a good one. Talk to you soon. Bye-bye.